So good morning to you, Ayo. I see you're already in the Friday mood.
Yeah, good morning, Aaron.
Okay, so,
Dress down on Fridays.
well, yes, I'm sure you do that, but that doesn't mean that the market is also going to dress down as well.
No, at all.
Okay, so how do you think the Treasury bills and bond market performed this week?
Yeah, its performance have been mixed. Based on high liquidity, which the market opened on Monday, about 1.2 trillion. But as a result of the need for banks to provide ahead for the CBN special forex intervention, which held yesterday, liquidity in the system contracted significantly, and that has led to the sell-off we've seen across the treasury bills market as well as the bond market. So investors are trying to create, especially the dealers are trying to create liquidity uh, in the system. So that has led to the significant or the slight yield that we've seen across the treasury bills and the bond market. You know what happened yesterday? The bullish sentiment within the bullish sentiment picked up within the treasury bills market. However, profit takers try to take advantage of the opportunities and sold down, resulting to the mild increase in yield we saw within the treasury bills market. Because the dealers who lost out of the DMO option, that the treasury bill option on Wednesday, had to position, and that led to the decline we saw in the yield.
But then, we're talking you're talking about yield contraction, about 138.17 billion naira. The same amount that was auctioned on Wednesday was retired to the banking system through maturing treasury bills yesterday. I remember we had this when we had this conversation on Wednesday. You mentioned this, and so I was expecting, and I'm sure a lot of people who actually follow this market data as well, were expecting to see a little bit of liquidity in the system.
Yes, yesterday we also saw about 32 billion net debit for CRR, also constrained liquidity within the system. And we also heard that some of the banks that are yet to comply with the Treasury single account implementation um, also had to direct funds to the CBN. So some of these factors were responsible for the moderation in liquidity within the system. However, when you look at the average liquidity as of yesterday, it closed at about 329 billion naira. It's still a little bit high when you compare it to what it was before the revision in CRR down to 25%. So liquidity is still fair, and we expect, like what we expect today, that there will be a refund of the unmet demand from forex to the system today, which will help also cushion the effect in terms of the liquidity decline we've observed in the market.
But there was a lot of sell-off also across most tenors at the bond market for this week, even though as at Wednesday we saw a mixed trading in that segment of the market. Is this likely going to continue? How much effect is this going to have on the rates?
Yes, you are correct, especially on the 2019 maturity, which we all know is part of the JP Morgan index. So the foreign investors are also trying to exit the position. JP Morgan, by the end of this month, will be excluded from the JP Morgan index. So foreign investors are trying to exit their position in the 2019 maturity bond. So, but yesterday we also noticed significant sell-off in the 2034 instrument, especially from the PFAs, which led to a significant increase in yield as they try to take opportunities in the market. So we saw significant sell-off we expect that it may also continue today. However, as we expect to see some form of stability in terms of liquidity in the system next week, which we would also expect to see renewed interest of dealers in the fixed income market.
Well, thank you so much, Ayodeji, for your perspectives. Have a profitable day, and of course, enjoy your weekend.
Yeah, my pleasure. And you too.
Thank you so much. Ayodeji Ebo is head research at AfriInvest.